Yo, what's it, guys? So here's something I want to go over with y'all, which is EURUSD, which is the sell that we caught, well, that I personally caught, this previous week. And let's just start this off the monthly, just basically just get to the chase. Actually, we'll start from a weekly, right? Easy. Only reason I was even considering this sell is just because, from a weekly structure perspective. Oh, why is it doing that? Right, we see highs and lows, right? Series of lower highs and lower lows, right? Now, what does that mean? That just means that we're in a bearish market, signifying that swing positions should always, or should more than likely be sell positions, right? So now we go back to the monthly, and what do we see on the monthly? I see one of my potential targets, right? Y'all know I've been talking about 1.08 for the longest, for literally the past couple months, honestly. Um, but now the interesting thing about that is the fact that we just came in. We might have just possibly mitigated out of a monthly sponsored candle, right? Just because they had a large bullish candle, took out a series of liquidity, and then gave a bearish move. So all this could be is mitigation to only continue lower. Um, as you can see, that rejected almost, perfectly, right? Even if you would have held the pending for that entire time, that's only 20 pips of drawdown, you know? So when you have into account that you're potentially rejecting a monthly sponsored candle, that's massive, right? So you're looking for every excuse to try to be in that move, right? So now that we start zooming in to a more intraday view, right? We finally see, price create essentially a triple top here, right? But there's one thing that's missing. That my EU bias will always also rely on DXY bias, right? Just because the dollar is basically composed, I think it's like 40% of euro or something like that. So obviously they're basically identical, just inverted, right? So obviously the DXY chart looks cleaner, and right where we see our low, notice if we highlight our previous low, notice how price came down to it, right? Created liquidity on smaller time frames, right? Almost like that UCAD in the video that I showed y'all, right? Liquidity starting to form, and then we get one large spike down. I can't show you guys volume because it's not available for commodities, but as you can see, we get that large sell off down, and then the new week opens above that pricing, and we never come back to touch that pricing. And that just inclines to me that we have just mitigated out of something, or we've taken out some type of liquidity. So what did it do? It took out basically a series of relative equal lows, right? So now that the buy side liquidity is taken, right, now we're looking to finally take price to the upside, which is what it did, right? So what does that mean for Euro USD? It created relative equal highs, but since the DXY bias is basically supporting this and there is no equal lows, equal highs on DXY, I just disregarded that on this pair, right? So now we can start zooming in to our 4 hour, right? So something that I saw on this pair was this right here, right? Notice we get an indecision, and then we get one last spike up before we get a reaction to the downside. So what does that what does that show me? That this candle is potentially a sponsored candle. Now, sponsored candles don't always have to be played out in the manner of, you place a limit there and then hopefully it dies. It can also be used as a reference point of where volume could be, because where volume is, that's where price is going to go. So when I highlight this 50%, that 50% is acting as a barrier for price, as you can see, right? And also notice that before, let's say, before this move happened, right, what do we see? Right, this last push up has zero volume supporting it. What is that showing? What is that telling me? That's telling me that that's probably going to be a false move, because it's not giving me volume to support that bias to continue upside. And what happened afterwards? You got the sell reaction, right? Which is right here, right? You get the sell reaction, and soon after that, right, you get the reaction, you get some sort of mitigation play, and that large sell-off, before we had a large engulfing candle, this engulfing candle, look at where it is. Right? So this is where common sense comes into play too. Right? So we have a large bullish candle, but the volume present isn't bigger than the bearish volume that came in earlier. So what is that telling me? That this could just be one last mitigation play before we sell off. So price was around here when I first saw it, and I saw this. So now I start zooming in. I start zooming in, I start zooming in. Now, this to me starts looking familiar. So I start zooming in even more, just so I don't waste time. Right, what do we see here? We see one big schematic of distribution, right? So instead of me marking it down for y'all word for word here, I'll just show you guys this. Right, this is literally this pricing right here. Right, so when you're looking at this markup, what do we see? Right, we see that the buying pressure has basically peaked out. Why? Because you see large bearish pressure before that, and it failed to overcome that. Right, so now what do we start seeing? We start seeing consolidation, correctional structure, and then soon after that is when we start getting our secondary test, our upthrust, and our UTAD. Right, but right when we get to the potential UTAD and the test, notice how volume is literally non-existent. So there's a series of higher highs being made, but there's no volume supporting it. That means that the sustainability of that move isn't good, right? So all that's telling you is that that could be potentially a false move, as in price is just driving up so it can fall down, right? And so what happened, right after the test here, that's when we got the full selling pressure come in, right? And the key important thing to notice about this is that it broke previous structure. So yes, yes, EURUSD left equal highs, but DXY didn't. DXY actually took the liquidity before it went up. So not only that, but now we see a large bearish closures on EURUSD. So now naturally, that which is here, naturally this drop here is going to create inefficient pricing. It's only natural, right? So price will have to come back to account for that, and it did. right? And there's actually on the 15 minute, there's actually a whole sponsored candle right here. And that's actually what this wick played off of, right? So let me show you guys. Yeah, as you can see, it's right there, right? Price played right off that 15-minute candle. So at the end, it could die off, right? And here's the cool thing about this too, right? This is about, this drop here was at about 2. Right, well, this mitigation move was around 4th of November 2019. Now we go to DXY and we go, I already highlighted it, but here we have the 4th of November at 6, right? Same time, but the difference here is that DXY already broke structure previously before this last corrective drop, right? That's only a mitigation move there, right? But after this completed, or after I saw this move, structure had already shifted, especially because price had already taken out its liquidity. So what does that mean is that we could be seeing large upside movement to the dollar because we might have just gotten a trend shift, which we did, right? So that's enough confluence for me to want to take that trade, right? Euro USD rejected a monthly candle, right? DXY supported the bias. We waited for the volume shift. We caught the mitigation play off the volume shift. You know, this is like one of the most perfect trades you can take, right? Let me delete the sign, right? So let's say this is your trade setup, right? You can put your stop over the closure, or you could be generous and put it over the wick, right? Either way, 3.5 to 5 pip SL, right? So now what do? You might have just caught a whole trend shift because you rejected a monthly candle and you're completing a distribution schematic, right? That's enough for me to change my bias to full on sells. So now you just want to ride this down for as long as you can, right? So you start zooming out, zooming out, zooming out, right? That 3 pip risk, if you would have held that for the entire week, up until Friday, you'd be up 150 pips plus positive swap. That's a 43 to 1, right? It's absolutely stupid. It's dumb, right? But that's what you want. That's what you should aim for, right? One swing trade for the week gave me 43%. Jesus, you know, on 10K in an account, that's $4,000, right? So this is basically as textbook as it gets, right? Like I said, you got your monthly confluence, right? You got your smaller time frame Wyckoff schematic completion, right? And everything else, everything else, everything else. You got your perfect entry, blah blah blah, whatever, blah blah blah, right? So these are the types of setups that you want to look for, right? And the reason why I'm showing you guys these videos is so you guys see the perspective from my eyes, so that then you guys can imitate it and make it your own, right? And then just notice that that's all it takes, right? A little bit of patience, a little bit of understanding of some correlations, and pushing buttons, right? And that's already a 1 to 43 trade. So yeah, guys, that just shows y'all why basically EU died this week. So yeah, see ya.